morning, everybody. Welcome to another day of Mark Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. And it is December 4th. We've got some great upcoming plans for the weekend. We do got a bit of economic data to go over. Today is a big day for the jobs data, so due by the Bureau of Labor Statistics. We'll start off with the average earnings for the month of November. In October, it rose 0.1%. Forecast count for another 0.1%. And exceeded that to 0.3%. So a little bit better than expected for earnings for the month. Here's the big one here. We got the non-farm payrolls for the Bureau of Labor Statistics, and the previous month, October, it was initially brought in at 638,000 new jobs. However, that was revised lower to 610,000 new jobs created. Forecast count for 69,000 for the month of November, and it really dropped down to 245,000. So normally that would be a decent number. However, with the pandemic and when we had about 20 million job losses, that's really not enough right now. We really need this to be quite a bit higher, and this is well below pretty much everybody's expectations. And unfortunately, we'll touch on this in a bit, but yeah, it's very disappointing. We got the average work weeks look to be the same. So we had 34.8 hours per week, and forecast kind of the same, and it came in at that same number here at 34.8. Unemployment rate came in October was at 6.9%. Forecast count for 6.8, and it actually came in at 6.7. So it dropped a little bit, which is obviously good news. Last but not least, factory orders for the month of October. So in September, we had a 1.1% increase. Forecast is calling for 0.8%, and it came in at 1% higher. So this is 6 straight months we've had an increase for factory orders, which is obviously decent news there that we've had this continuing to grow for 6 consecutive months now. Also, I'm sorry, factory orders also had a revision there too. So this one from 1.1% back in September up, it went upwards. It was revised higher to 1.3%. So my apologies for missing that earlier. Let's go jump ahead to the headline news. Stock market's up, and more stimulus is the big question, because with that jobs number, that very poor jobs number, that kind of brings on the more of a basically is putting in the need that we will probably need some type of stimulus. And right now we are at a impasse with what the Senate is willing to go. They want more of a targeted, where other factions are also saying they want a little bit more of a broader based. So we'll have to kind of wait and see what happens. But this just makes more of a case with these poor jobs numbers. This is more of a case for more needed stimulus. So let's jump ahead, see how this is playing out in the headline mortgage-backed securities. So as a result, even though the stock market's up and we're trading, but this is more due to the line that if we do get more stimulus, especially a big one, that means we are drawing more debt. As we draw more debt, that creates more supply and demand, where we have more supply but not enough demand, and we create an issue where rates are rising as a result. So we are down about 16 basis points for the day so far. We're kind of getting to the point where we might challenge the 25-day floor that we have right here, and as a result, rates will be a little bit higher today compared to what we had yesterday. Yesterday, as you saw, we were kind of this sideways pattern, but then we dropped a little bit further on the news of the poor jobs report, which, typically that would be good for mortgage-backed securities. But on this note, this is just making more of a case for more stimulus package that will be needed to get things rolling ahead. See how yields are doing. Yields are up, as you can see here. It's challenging its next technical level, which has been pretty strong. It's held it in the past, but we'll see if it kind of holds that today. It's just under 0.97 right now at 0.966 for the day so far. So anyways, hope you guys have a great rest of your day. Thanks so much for watching. Obviously, rates not so good today. I mean, rates are very good, but they did worsen a little bit today. Typically, that would probably translate to about maybe 1/8% to the rate. But in any case, if you guys are out there looking to refinance or purchase, please feel free to reach out. We can help you guys in many different ways. I'll leave a link at the end of this video, as well as in the description. Please feel free to click on it and check out the site. You can get more information that hopefully will answer some questions. If not, I am a loan officer, and I do work with a national lender, so we can certainly help you guys out in those avenues as well with your refinance needs as well as your purchase needs. We get you your pre-approvals you can buy to help you refinance into a lower rate or take money out of the equity of property, or even put you from a 30-year to a 15-year, or if you want something different, we can certainly customize that for you as well. Thanks so much for watching. We'll see you on Monday's video. Take care and have a good weekend. Bye-bye.